Welcome to Beat the Market. My name's Antonio, content creator of Beat the Market, and I'm going to do another Bitcoin technical analysis using Elliott Wave and the Wyckoff method. Stay tuned, guys. Okay, first thing first, this is a daily chart of Bitcoin here, and I want to remind you guys on my 5-wave Elliott Wave that I believe Bitcoin went through in the ABC correction. All right, so here's the impulsive wave. One, two, three, four, five. Okay, that will be 5 waves down. Okay, I'm gonna take that out. Switch over to the ABC correction. Okay, ABC correction comes right after the 5 wave. Okay, that's ABC. Okay, so if you go to the rules of Elliott Wave, clearly says the target would be the 61.8 retracement. Right? This is the 61.8 retracement using Fibonacci from where the trend started right here, all the way to where the 5th wave ended up here, bounced off the 61.8 retracement. Not once, not twice, but 3 times. 1, 2, 3. All right? So according to Elliott Wave, this is where the best entry would have been, around the 30,000, 31,000 mark. I've been saying that in the previous video, so if you guys watched it, you guys probably, hopefully, caught the move with me. All right. Here's the next thing I want y'all to look at. I'm gonna go back. Gonna go to a 4-hour. Okay. Gonna make it bigger for you, so y'all can see. This right here, it's a 4-hour of Bitcoin. We're taking a closer look, and what it shows me is that we are in. It's not loading. An accumulation schematic 1 for the Wyckoff events. All right. So I believe we're around this area right here, up here. You guys compare the spring, the test, broke resistance, testing another previous resistance. All right, I believe we're right here, previous resistance, possibly around here as well. So what I'm waiting for is a dip before I enter. If you guys see my previous video, a lot of y'all might have entered here, which is where I entered. But I took profit up here because I'm a trader. But I will be looking to buy the dip. So it could be anywhere around here, okay? I think we're here, but it's possible we're here. If we look at and compare, possibly. So I want to see a dip. I do have some support levels that I'm watching. I had it here on my Discord. Support levels for Bitcoin, I had 36.7 thousand, 35,000, 33.1, 32.4, 30,000, and 27,000 would be my critical level. Below that, I will be bearish. There's a reason. Okay, I will explain. But as of right now, I'll be looking for bounces off of there. I am kind of favoring 32.4 to be honest, because a lot of people is going to get bullish. If market makers bring it back down, it'll scare a lot of people, taking them out of their trade. Perfect for them to bounce back up and go on this full bull trend. But the reason I am favoring 32.4 is because if you look here, you will see a support line here, right? As you can see, it started here, got tested here, and even tested there. Setting up these support levels on purpose to knock us out of our trade. All right, so under here would be an area of liquidity. Under here would be an area of liquidity. As you can see with this price action, the market makers, they sold it down and took all of our stop losses out, knocking a lot of retail traders out, only just for them to push it right back up. So in this situation, I explained in my previous video, but I'm going to do it again. You want to look at the last selling candle. That is your institutional candle. This right here is our institutional candle. So what happens is, when you find an institutional candle, you want to 50% of the 50% retracement of it, which I will do for you guys right here. I will go to the body of where it opened and go to the close and where it closed, and I'll find the 50% retracement, 0.5, that's 50%, 32.4K, which is where I left my orange line. All right, I'm gonna take this back out. As you can see, it tested here. Market makers pushed it up, came back and tested here, right before they pushed it all the way up to the new resistance. And I'll take this out, don't get so we get confused. Now I go back and test resistance. I don't want to catch FOMO. I don't want y'all to catch FOMO. I want y'all to wait for a pullback. I am favoring this, but we can get a pullback around previous high around 36.7 or around here around 35, 34. Also around 32.9, 33. But I am favoring this one. If none of this holds, I will become bearish, guys. If it drops below 30K and 27K, I will become bearish. The reason is, so we're looking at the the accumulation where I believe we are either here. So it looks like we're getting ready for a bull run. However, I don't want us to jump the gun. I want us to take a look at a different perspective. This is also Bitcoin, the daily chart. As you can see, looks very similar to the distribution. Right? I think it was schematic 2. Schematic number 2. Yes. This is schematic number 2. So in this schematic number 2, we are around here, around so. All right? Very close into phase E. We could, yeah. We're pretty much in phase E. So we have to watch, guys. So according to so, if these support levels get broken, it's going to be a falling knife, a hard elevator down. We don't want to be on that elevator down. So I want you guys to watch this level carefully. Watch for the bounce. Don't get FOMO in yet. All right, watch our support levels. I'll go back for you. 36.7, 35K, 33.1, 32.4, which is what I'm favoring. 30K, which has had plenty of bounces off of it. And 27K, which is a critical level because it's possible that people will try to buy in 30K, set their stop loss below it. So the market makers may move to 27K to knock them out before pushing back up. If it doesn't hold, guys, it could be this playing out and we're going to lower lows and Bitcoin will crash. So don't get FOMO. Be disciplined, guys, and watch carefully what Bitcoin is trying to tell us. Okay, so wait for the bounce off of one of our support levels. All right. Good luck, guys. I hope this helped. Y'all have a good day. I'll see you soon.